Guys, welcome back to my YouTube channel. This is a EuroUSD chat, and I want to show you how I approach daily setups based on higher time frame. Um, and as you can see, this is a daily chart in EuroUSD, and I'm bullish long term Euro dollar. So let me hide my drawings. So the purple line there is that's a weekly PD array, and the the gradings that I've made on the week that was found on the Thursday 16th, Friday 17th October. That week is the PD array that I'm referring to trade the daily setups. Uh, Currently we are in. So now this, let me show you that week there that was found on Friday 17th October is a PD array. So if I'm bullish, I'm gonna look for PD arrays that will support price going up and will only favor longs on intraday trading. So without wasting more time, let's jump into lower time frames and see. So this is a 5 minute chart, and the grids that you see here, the lines, the blue line and the red and the gray ones, that is a daily PD array, the week that I showed you. Now we are in a 5 minute chart, and I'll show you how to utilize it. So for better understanding, let me take you back to our daily charts. So you see the grids are plotted here. I plotted from this candle right there, and it's 0, 0.25, 0.5, 0.5, 0.5, and 1. That's 4 quadrants, and this bearish candle right there is a PD array by itself, and even it's weak. So I'm using this week to trade. I want to show you the trade that I took and what was behind, the logic that was behind. So as you see right there, so let me take you back to a lower time frame so that you may not get lost. So we are back into our 5 minute chart, and the grids that I showed you on the daily chart, they are here, they are the same. And this is the day that I took that setup, and let me show you what I saw for me to put my position in there. So as you see, the market opened right there. Let me show you right there. That is a 1 hour break that is found between 16 and it opens on, yeah, that is a session break. If you know it's in the trading view, you can set it. So basically that's how the market reopen, resets, and I want to show you the Asian range and how to utilize it and to form a setup a daily setup using the AMD pattern: accumulation, manipulation, and distribution. So the blue light box that you see there, that I've highlighted, is a price section for Asian session. And as we all know, when the London session opens and we are bullish, we expect the market to open and run for liquidity below or above the market and run against the majority thing. So uh, after London open, the market kept on going lower, continuing with the trend for Asia. And I want to take attention right there. So the blue line that you see, that's the 0.75 is the upper quadrant of the daily wick, and the red line is the 50% of the daily wick PDRA. And the market open, we're in a 5-minute chart. That's my low time frame chart, and the market opened. London session began here. London session begins at 1 in Forex. 1 a.m. began there, and it ran for liquidity, which was below the Asian range. And it's not random, it ran down, it kept going lower until the market hit the middle range of the daily wick. And from there, let me zoom in. So after the London open and the trend for the liquidity below the Asian range, it came down to the middle range of the daily wick, which is here. And from here, if you notice, the market kept forming lower lows, lower lows, lower lows, and the moment it hits and dug into that middle range of the daily wick, the market shifted to the upside. Now, as you see, this is a swing low, swing high, swing low, swing high, which was higher than the previous high. That's a market structure shift, leaving a gap that qualifies. And yeah, it shows that we are in the right way, and the fair value gap, obviously, the market will utilize it to fill in their orders, and markets began going higher. Let me show you the gap that I'm talking about. Now I've highlighted that gap right there in a 5-minute chart. Uh, that one right there. So the market, after it shifted to the upside here, shifted to the upside, came down, filling the gap, went up again, came and utilized the same gap and began going higher. Consolidated around here. Look what happened. It came again during New York session and dug into the same gap that was formed during London session. And at the market structure where it shifted to the upside, it came and utilized the same gap. Then notice here, it the bodies of the candle stayed above the upper quadrant of the fair value gap that was formed. That's one sign that you are in the right position, and yeah, you are in the right side of the market. So from there, if you didn't get a chance to uh, put your position there, you could have gotten it right there. So the moment you get a chance to enter during London session or New York session where the market has swept the Asian lows and we are below the market and we are bullish, we expect the market to expand to the upside to target the liquidity above the Asian session. So let's see where. So the black line that I've highlighted up there, that's where the Asian high was, and that's where the liquidity uh, is resting above the market. So when the market shifted to the upside, and maybe you get a chance to put your position in there, your first take profit should be between the range of the low that was formed where you entered and the high where you target your daily liquidity. So first take profit, mid range of the expected move, and second take profit should be above the market price. We expect the liquidity could be resting, which is right there. And indeed, the market came and swept that liquidity, and we see it consolidated the rest of the day to the end of the session. So, hope you find this video helpful. Till